video. This is the Float Locker, where you learn how to not invest like a degenerate. Don't be like those people on Wall Street Bets trying to turn $5 into $5 million by going YOLO on some fucking cheap out of the money options. Over time, you will lose, guaranteed. I've been there. It's fun. There's an adrenaline rush, you know, the instant gratification, but over time it's not a viable strategy. Not only that, but you're spending countless hours in front of your computer, which takes time away for you to concentrate on other ventures. So here I'm showing you in this video what you need to stop doing if you want to be profitable trading the stock market. And it's very simple. So before I get into that, here's my website, Avenue of Income, thefloatlocker.com. Go to thefloatlocker.com. Link is in the description below. And you come to the site and you could just kind of see, track my performance. Every week I post a portfolio update. I didn't post one this past week. I didn't get a chance to, but I will be posting one this following week. But yep, you go here, you can see my trades, my portfolio performance, detailed trading stats, how my trading is, how it's all broken down, how my performance is trading the stock market using this account. Trading executions. I used to post all my trade executions, but it just took a lot of time. Maybe as my channel grows, I'll reinstate this, but I left it here for now. I also post education and just general information on the market. So I started this account back in June. I opened a TD Ameritrade account specifically for this venture, right? To show people how you can be profitable trading the stock market. And over time, we're just gonna let it grow and consistently contribute to the account. I contribute every week, but you could do it monthly or however often you want to do it. And just keep rolling the profits and keep growing it. We started it with $8,000. We're currently at $14,300. So yeah, so just give it a follow and follow my performance. So with that said, just quick overview of my positions. As you can see, I've drastically reduced the number of my positions from my last videos, and I think it's actually helped. Even though I have almost $6,000 sitting on the sideline not being used, it's brought me more peace of mind. The volatility has been reduced, especially during this time, and especially during this time where the market is just very choppy and a lot of uncertainty with the elections and the stimulus. So I made the decision to just reduce my number of my positions and just take very select trades. So there's that. If you want more details on these positions, I'll post it on my portfolio update. Alright, now time to jump into this video. So what can you do to be profitable in the stock market? What do you need to stop doing? Well, first of all, if you're brand new to trading, you should have a long-term trading account. If you do not have a long-term investment account, you shouldn't even be looking at trading, day trading or scalping, or even like any type of short-term swing trading, right? And I'll tell you why. If you have a long-term investment account, in a way it takes the edge off it takes the edge of the pressure off your mentality, right? It allows you to be more focused and using the short-term trading account when you do have a long-term account the way it should be used, right? So you open a long-term trading account, and honestly, just invest into broad market ETFs like the SPY, QQQ. If you do futures, use the ES futures or the NASDAQ or Russell, whatever you want to use, right? Whatever your strategy that you follow, use that, right? And every week or every month, you consistently, without question, just put in monthly cash flow, right? You contribute to the account no matter where the stock market is. You dollar cost average, and you just consistently do that, and over time your money will grow. And it's been proven over 100 years that you get an average about 8 to 10% of return on your money. So doing that, you'll outperform the majority of people out there. That's why it's important to have a long-term trading account. You don't touch it much, you don't day trade it, you just leave it and just consistently contribute to it. That is key. So once you have that set up, then you can start a trading account, right? You still want to play the market, you want some action, right? I understand, I totally get it. I love trading the markets, right? So open up a trading account, right? Keep it separate. If you have to open a separate brokerage, open it at a separate brokerage, or even like TD Ameritrade, you can separate accounts. Lots of brokerages, they allow that. Just make it separate. Don't combine it with your long-term account, because you're gonna do some stupid shit. You're gonna start day trading your long-term positions. Things are gonna get jumbled and mixed up, and then you're gonna end up blowing up your whole account. So don't do that. First of all, leave your long-term account separate. Make it in a Roth IRA, or whatever, to just keep the taxes minimal. Just keep it separate. So once you have the trading account set up, right? So what is it that people do, right, that causes them to lose trading the stock market? Most people lose trading the stock market, and I'll tell you, first and foremost, it's not the strategy. Especially if the strategy is proven, it's been around for a long time. Any strategy that's out there will work. The problem is you. It's all about you, your mentality. Not only your mentality, but also your trading size, your risk management, your money management, right? You have to have those key items in check. Otherwise, you're just gonna lose. So what you need to do is, put in writing, or determine how much you're willing to lose per trade, and that's it. You keep it at that number, and as your account grows, you can start increasing the risk, right, as your account grows relative to your account. And it depends, how much of a risk appetite you have. I mean, some people say do 1%, some people say 2%, some people say 5%, some people do 10%, right? It just depends what you're comfortable with losing should the trade not go your way and you get stopped out. So that's first and foremost, right? Follow the strategy, follow the risk management rules that is in place for that strategy, because different strategies have different risk management rules. Second of all, your money management. Each trade needs to be the same size, because all we're doing is trading. You're not trading based on the price of the stock. You're trading based on percentages, right? Percentages gained, right, versus your risk, right? So if it's a favorable trade and you're willing to take the risk, you put on the trade, right? So keep your money management in check. And your mentality, I mean, honestly, I still fight with it to this day, but you have to get it in check. You have to find a way to have a strategy in place that allows your mentality to be calm when you trade. If you're flustered, if you're just like confused, if you're forcing trades, right, then it's probably not the right strategy for your mentality, right? So you gotta find one that fits you. And so I'm going to show you what I do, right? I've touched on this in a few other videos. But what I do is I use technical analysis and I use options, right? So those two things make up my whole strategy, right? And I'll show you how. So when you use technicals, say we want to go to Apple. Let's use Apple for example, right? Let's close this up. We got the Apple chart here, right? Daily chart, 6-month daily, right? I want to get long Apple. Stock is almost at 120, so it's kind of had a nice run, right? From like 10 under 110 to 120. So the problem is that most people they want to just get long the stock, right? They get that FOMO, right? Everybody gets that FOMO. You're like, shit, man, this thing keeps running. When am I gonna get a chance to get in, right? 3 days been straight up, right? You're just like, oh my god, I've missed my opportunity. What am I gonna do? And this is what you do. First of all, you keep your size small, first and foremost, and you'll see why as I go through this. Second of all, use technical analysis, right? You're like, okay, well, if I buy in now, what's the worst that can happen to the stock? Well, we do have a gap here, right? We got a gap here at 96.19. That was the close of this candle. That's a pretty big gap. If we break 103, or even if we break this low here of 100, if we get below 100, we're going down. And if you buy shares, common stock here at like 120, that's a pretty hefty loss, right? So how can you get involved? How can you be in the stock? This is what you do. You're like, okay, so 96 bucks is probably the area that it would touch if things break down, right? Let's sell some 90 puts, right? Why not? Reason why? When you're shorting put options, you're essentially long the stock. You're long that company, but you're obligated only to buy shares. In this example, if you sell the $90 puts, if the stock gets below 90, then you'll keep all the credit, and then you'll be long the stock at $90. That does two things. First of all, it allows you to be in the stock, be involved, right? Prevent the FOMO. Second of all, you stay small, and you're still collecting money as you sell these options. I'll pull up this option chain. We'll go out to this December. We'll go to the 90s. We'll go far out here, right? 90s. It's a little cheap, right? That's a little too cheap for me. So if you want to get a little bit more risky, maybe go 95 or even 100, right? Like if you're willing to own the shares at 100, even though if it falls to 90 and you're okay with that, then that's fine. It all depends on your risk appetite, right? Like how much of a drawdown can you take? And that's where you sell those strikes, right? So, and as time goes on, you can roll it up, you can keep selling the same options. It depends on what your strategy is, right? But ideally, you just keep selling those options every month, collect the premium, right? Every month, and that's how you make income, right? So if the stock does fall to 90 and below, and you get assigned the shares, you own the common stock, right? What you can do is you can start selling covered calls. You sell call options against that stock, and you just keep doing that until it gets called away, and then you restart the whole deal again, and keep it going, right? So that's how you get involved, right? And using technicals is key. It helps a lot, right? It's not necessary, but it does help a lot, right? You can map out key levels, and you can understand what your risk is, and you can put yourself in a position where you have minimal risk, right? And still be involved with the stock without having to put yourself up here at 120 buying common stock and then having it drop and being pissed off because you bought too high. You bought the high, you FOMO'd in like these people did. You know, after the split, the earnings split, this thing just ripped and people were buying up here. It was crazy, right? And finally it just came back down. It probably needs some time to digest, right? So that's kind of it in a nutshell. That's how you stay profitable in this market, right? There's a couple of key things here. You keep your trading small, right? Staying small, selling options in stock that you wouldn't mind owning. Just use Apple or any stock that you're like, oh, I wouldn't mind owning 100 shares of AMD or even Amazon, depending on your account size, right? You know, even smaller stocks, right? You can go down to Dell, right, or whatever, right? The key is you wouldn't mind owning that stock. You want to own that stock, so you're like, okay, I'm gonna sell some options way below the market and just collect premium to see if it gets to my level. If it doesn't get down to your level and it keeps ripping, roll up the puts and keep collecting premium that way until it comes back down, and eventually you own the shares, right? And then you go from there, right? And that's how you grow a position, and that's how you start trading. And usually most of the time you're just going to be selling options, right? Most of the time you're not going to be getting assigned, right? So this is like the short-term trading, you know, being involved in the market, letting time do its thing, let the options expire, decay, you collect all that premium, right? And that's pretty much it, right? So that it's very simple on what I do here, right? What I'm showing you how to trade. And if your account's too small, use a credit spread. You know, like if you're trying to trade like say Amazon, for instance, that's a huge stock, right? Like to sell naked puts, you know, you're putting up like tens of thousands of dollars, like $20,000-$30,000, depending on the broker. Use spreads. You know, what's your risk? $10 wide, right? Are you willing to risk $700 to $800 a trade? $1,000, $2,000, then you can make it that wide, right? The spread. You know, I'm not a big fan of spreads, but it does come in handy. Like for instance, I have a spread on Facebook in this account. I put on a spread today. I like the stock, but it just takes too much money to put on a naked put. So I went with a credit put spread. You know, so there's nothing wrong with that. You know, it doesn't decay as fast as a naked put, but I felt like I needed to be involved in that stock today, so that was key for me. All right, so next thing, when you have a losing trade, what is the right thing to do when things go against you and it's going? You say you have a naked put in Apple and the stock falls to 90. And it keeps going down. It goes down to 80, and you're like, holy crap, something's wrong with Apple, right? This is where you need to have risk management in check, right? If it gets too low and it hits a percentage or your risk, what you're willing to risk on that trade, you got to cut it off. I mean, if it goes down to 80, that's a huge move, right? That's a huge move, but I mean, it's definitely possible. Definitely possible, and sometimes that will happen. And either A, you stay small enough in your short puts that you could keep rolling that naked put out in time. You can start in December, right? If it's not going your way, sell the Januaries, right? When it gets below, when the Decembers get like under 20 days, right? You want to start looking at rolling them out in time. And you keep collecting credits over time. And you're like, you know what? I'm just going to keep rolling these out, right? Especially if you don't get assigned or you're still in the options and you're losing money. Me personally, if I'm in a losing trade and I want to stay in the position, I just sell in the hole. I roll it out and sell, collect more credits while the stock is going against me, right? It allows me to collect more credits and also, just take part in the move when it does finally turn. Because eventually the stock will turn, and you should eventually get your money back, right? If it's a good quality stock. That's why it's very important not to trade shit penny stocks, because those things can go to zero. If you do an naked option trades on penny stocks, then you're doing it wrong. You're asking for trouble, right? So quality stocks, quality names, right? Keep risk in check. Very important. So that is my strategy. If it's going against me, I keep rolling them out in time, and I got nothing but time. And the key is staying small. You stay super small. You keep collecting those credits. They add up. Eventually it'll rip. It'll have a day where it'll rip. Maybe get back over $100 a share, right? If the stock was over into 80, get back over $100 a share. Then you keep all that credit you collected, right, over time, and you have a nice payday. And that's what you're waiting on. Waiting on that payday. There's other ways to manage it. You can sell a call against it if things aren't going your way. Create a strangle, a straddle, right, to limit the volatility. It's very important to limit the volatility in your account, right? Protect yourself. Yes, it might rip back up, and then you lose out on those gains, right? Or you start getting tested on the call side. But that's the trade-off, right? You have peace of mind in order to stay in that trade, right? And you just got to use these strategies to your advantage, right? And limit the amount of volatility in your account. It's very important. There's strategies, and you have to use these strategies to protect yourself. All right, so that's pretty much on the for holding a losing trade, right? It all depends, right? You believe in the stock still, as long as you still have a thesis and you still like the stock, keep rolling out those puts, right? So that's key. All right, so and the last thing I want to talk about and just reiterate: stay small. Keep position size small. I know I said this before, but it's the most important thing to protect yourself. That's the only thing you can control, is your position sizing. You keep it small, you can't get hurt. You can't get hurt. It would take a lot for something to hurt you when you're staying small, right? And that's key. It's all ties back to your mentality, how you act in the market, right? You can't trade right if you're flustered and you're getting killed in the market because you're too large, you had FOMO, right? Or you got in at the wrong time and you got in too large because you thought, right? You had the opinion and thought that you were gonna ride this bull market up, right? Or whatever stock it was. And you're like, oh yes, for sure, this is gonna keep going, right? That's usually the time when it's time to sell, especially when you get that FOMO. 9 times out of 10, that's the time to sell. So if you miss a move, let the FOMO, try to control that FOMO. If you have to get in, stay small. And if you have to get in, use technicals, right? And if you have to get in, sell options at key levels, right? That make the trade worth it, right? That make the trade worth it, but allow you to have minimal risk. It's all about mitigating risk. All ties back to that, right? Stay small, mitigate risk. All right. If you do those things, keep it simple, right? You don't have to make it complicated. You keep it simple. Do those things. Keep it consistent. Keep your size consistent. Keep your risk consistent. Right? You'll make it. I guarantee it. And I'm showing you here in real time with this whole ordeal with the YouTube videos, my portfolio updates on my webpage, right? That's how you do it. And that's how you become profitable in this market. No opinions, just trade the trend. Markets generally go up over time, right? I'm not a big fan of shorting the market. You know, it just causes more confusion. It especially when you're trying to short the market, that means you're always involved in the market. You're always trying to catch that move, right? And it gets exhausting. Sometimes when things get choppy, you step away, take a couple weeks off, you know, just monitor, make sure things are still choppy, you know, things are still not set up for you. And then when your market comes, that's when you come back and get in the seat and start trading, right? And take advantage of those opportunities. And honestly, to develop that type of skill, to be able to identify those trends, there's no other way than just being in the market. You're not going to learn it in a book. Someone's not going to tell you how to find these things. You just have to experience it and know, right? It just takes experience. You have to be in the market. That's the catch-22, man, and that's how they get you in, you know. And hopefully you survive long enough to realize what you need to do and how to identify those trends that you need to trade, how to know when to step away, when to come on strong, when to press, right? Just have a good idea what the market's going to do. I guarantee you'll be profitable. All right, well, that's the end of this video. If you want, leave a comment in the comment section below. I'm willing to answer any questions you have. You know, I'm willing to debate strategies. You know, anything. You know, it's all open. You know, everyone has their idea and opinion, right, on how to trade. So if there's some things you don't agree with what I said, feel free to leave a comment. You know, we'll keep it friendly and keep it civil. Alright guys, please subscribe to my channel and subscribe to my blog too. You know, you come to the website, thefloatlocker.com, and you know, just drop your email address in there. You'll get alerts whenever I post my portfolio updates or any other blog posts. Alright guys, till next time, stay safe and trade well and keep it small. Thanks guys, bye.